So guys, one of my favorite setups when it comes down to trading is reversal patterns. By far, this is my favorite setup when it comes down to all the different entry models I trade. You know, I like trading continuations, but my favorite setup by far is catching reversals, whether it's a bullish reversal or a bearish reversal. The reason why I enjoy trading these reversal stick patterns and these reversals in general is just because I'm able to catch the very beginning move of a trend. That'd be one. I'm able to maximize the entire trend too, and I'm able to make as much profit as I want because I'm catching not only the first entry on the swing, but I'm catching all the continuations on the lower highs or the higher lows, depending on if you're in an uptrend or downtrend. So my goal with this video is going to be for you guys to understand the concepts, understand the entry model that I'm going to be showing you, and not just that, but be able to take full advantage of every trend that you're trading, whether you're trading in a downtrend or uptrend, or whether you're trading in a continuation market or a reversal market. What I want to do first is I want to go over how the market works, and I want to go over where these reversal type setups are going to be taking place. Now, a few key things that you got to factor in when it comes down to you and your trading, and the biggest thing is going to be understanding where you're at in the trend. Now, when it comes down to it, you're going to be trading in markets where they go from bull to bear, right? And then you're also going to be trading in markets where you're going from a bearish market to a bullish market. Now, your goal and your job is just to understand where you're at in the market and understand how to maximize your returns when it comes down to catching these reversal stick patterns. And not just reversal stick patterns, but just shifts of market direction and things of that nature. Now, in an uptrend, the market's going to be going through key points. Now, your job as a trader is going to be able to identify these key points. In an uptrending market, you got higher lows, and we have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs. Now, we also have breaks of structure. Now, you might be saying, hey, Justin, a break of structure is usually when price changes. Now, there's a million different ways of trading. There's a million different ways of calling things. Some people are going to call things breaks of structure. Some people are going to call it reversal. Some people are going to call it shift of momentum. Some people are going to call it change of characters. It doesn't necessarily matter. In an uptrend, you have continuation breaks of structure, such as when the previous higher high gets taken out here and there. When the previous high gets taken out, it's considered a continuation break of structure, as you guys can see here. And then we have reversal break of structures. Reversal break of structures is when the structural range is from a higher low to the highest high in the trend, and price fails to go higher, and it actually comes and it breaks through your structure point, aka right here, this is a higher low, right? It comes down and it puts in a new low, and this becomes a lower low, and you have lower lows, and then continuation breaks of structure, continuation breaks of structure, continuation breaks of structure. Now, what our goal is going to be to understand today is, very simply put, is we want to just focus in on trading in these ranges, whether we're in a bullish market or we're in a bearish market, right? So there's two types of reversals. There's going to be the bearish market, so a market that is going down, such as this, the market that's going down, that comes down here and reverses. And then there's going to also be the setup of a market that is an inverse, which is just bullish to bearish, right? Now, just to put it as simple as possible, we have an uptrend that goes up and then we reverse down. In these types of setups, we're not worried about what's happening in the uptrend. We're just waiting for the downtrend, right? And vice versa when it comes down to the inverse. In the inverse market, we have a downtrend that shifts direction into an uptrend. We want to look to take advantage of the uptrend. And that's why trading market structure is so important. Like I said, we're not going to be focusing in on what's happening in this part of price. And I'll just change the color to blue. We're not going to be focusing on what's happening on this part of price. We're going to be focusing in on what happens in this purple area, and then more so what happens in an expansion with this red area, right? If you're able to understand this very, very simple concept, you're going to be able to not only maximize what you're making in the market, but, you know, really be able to run with, you know, these trades that are maximizing your potential profit when it comes down to the trend. So family, very simply put, all we're looking for in a downtrending market or an uptrending market or just a market that's reversing is we're just looking for the structural range to show us a break of structure. Now, what does that mean? Here's our higher low and here's our highest high. In the sense of how a market should trend, if we're in an uptrending market, the market's moving up. As long as we're trading in the range, all it means is it doesn't matter what happens between these two lines. As long as price doesn't break below our previous higher low, we should assume that the market's going to continue up. Now, the moment that we do break our previous low, now that is a strong indication of a change of direction or a shift of momentum. So when it comes down to this market specifically, what do we see? We see price make a higher low, just like we have here. It goes up, it puts in a new higher high, amazing. And then it comes down and boom, it breaks structure, it puts in a new lower low. Now, the setup that we're gonna be focusing on is how to catch this entry or the first wave of a confirmed change of direction or a confirmed reversal. Now, what I wanna do is I'm gonna give you guys another breakdown or another concept that you need to take down when it comes down to your trading and your understanding of this reversal. Now, when it comes down to a reversal, you have to understand an entry model. In the case that we're in an uptrending market that is changing to a downtrend, let's just say our market looks something like this. Now, the moment that we have some type of reversal, all we're focusing in on doing is taking a specific setup. Actually, I don't like that at all. So let me just mark this shit up and then we'll edit this fucking bullshit together. Reversal break structure.
Down.
When it comes to a bullish to a bearish example, this is going to be our entry model. Now, price is going to be going up. It's making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, highest high. When price gets to our highest high, the only key point that matters is the previous high or low. Doesn't matter what happened before. All that matters is our structural range, which is our swing low that put in the new swing high. Now, in theory, what should happen is price should pull back and go higher. But the moment that fails to do so and we have a change of direction or a reversal break of structure, now we're putting in a new lower low. So now what you have to factor in is you're trading in a new structural range. You're trading from this swing high, and we'll change the color to blue, to this swing low. We'll also change that to blue. Now, what should happen is price should make some type of correction. It should make some type of pullback, just like this. In this case, it might come into a supply zone. It may come and fill an imbalance. It also might hit an order block, a number of different things that, you know, we use in our trading. And from there, this is going to be your entry to then catch the waves down and, you know, start the trend. Price could pull back, keep going and keep going. Once you catch the first confirmed reversal entry, then, you know, catching continuations becomes very simple. And the same thing in inverse. Instead of supply zone, this is a demand zone. Now, same concept here. We have a bearish market. We have a break of structure to the upside. We're going to look for a pullback. Once we get that first pullback, we're able to enter, and then we start swinging it and catching every single wave inside the trend. Now, what I want to do is I'm going to take you guys to the actual charts, and I'm going to show you a live example of a reversal trade that I took this past week. This was a trade on Euro NZD. I actually took this trade on YouTube Live. If you guys have been watching any of the live streams, yeah, I'll come out with a very consistent schedule when it comes down to the live streams, but make sure you subscribe and keep your notifications on so you can take advantage of those streams, because we do call out trades live on those streams. What I want to do is I want to go ahead and share my screen once again. I'm going to show you guys a real life example. What I want you guys to take away is we're going to be combining two things. We're going to be combining market structure, and we're going to be combining supply and demand. All that really means, guys, is very simply put, we're going to just take all of the nuggets we've learned from all of our videos. We're going to put them all together, and we're going to show you guys how we're able to maximize the trades that we're taking in the market. So step one, when it comes down to structure, what I like to do when I come to the market is I like to identify all my structural points. In this case, Euro NZD has been going very bullish for a while now. In the sense of what I like to do and how I like to draw my structure points, it's really simple. I just like to draw little circles on the charts. You could label them, you could do whatever, but I like to just draw these little circles, and all I'm really doing is I'm just connecting the dots, right? And what do I mean by that is, very simply put, in an uptrending market, the market's going to look like this. So sometimes it's hard for the average person to see this with their eyes. So what I taught my traders how to do is I taught them how to connect the dots. Now, in regards to connecting the dots, just for the sake of time, for me, what I saw when I was trading this market in the sense of structure was we had a swing low, swing high, a new low, price rallied, we made a new high, we pulled back, we made a higher low, and then we came and we made our highest high point. So I'm putting the replay tool on just so I can give you guys some perspective on this. Yeah, we'll do it there. Okay, in the sense of the trend, it doesn't have to be perfect, but we're looking at the market like so, and we come to our highest high. Now, remember what I said about connecting the dots. You want to make trading really simple for yourself, right? For me, when I first started trading, connecting the dots was something that, you know, was simple, fun, people understood it, and they were able to learn it and just run with it, right? So now, first things first is understanding market structure. We have a higher low here. I'm just going to abbreviate this as higher low, pushing up to a higher high. Now, what should happen in theory is price should make some type of pullback. Price should have made some type of pullback, maybe into a deep discounted range, somewhere in here, whatever, maybe somewhere down here, doesn't matter. And then it should have went higher. Now, what we actually see is we see price broke structure. We have a reversal break of structure. When the relative structural low gets taken out, the previous higher low, now what we have is we have a reversal break of structure. Now, once you see this reversal break of structure, what's really happening is very simple. We had an uptrend going like this. Here was our range. And, you know, we pulled back, we pulled back, we pulled back, and then boom, we break structure completely. Now, when we break this structure completely, what you have to take away from that, very simply put, is that now price is changing directions. More than likely, we should make some type of pullback before we go lower. This is just a very simple example of the drawing, right? Now, this is where things get interesting and you start adding things on, right? Really quick, in the sense of our drawing, just because I know some people really like the examples. There's our break of structure here. We should pull back. There's your entry, and then you start going lower, right? Let me do this with the path tool just so you guys have a good example of that. All right, so boom, boom, boom. Break a structure, pull back, boom. This is the entry that you want, and that is the swing. So that's a very simple drawing of what it is. Now, from a perspective of the actual charts, what we have to do is now we have to start creating a narrative. Now, the narrative is we were bullish, now we're switching to bearish. Since we're switching to bearish, we have to take the high that put in that specific low. So for me, I see this one here. And then I also like to draw another fib from this high down to this low. Now, what this does is it kind of gives me a cluster, and a fib cluster isn't a make or break thing. It's just something that I like to use just to see if there's anything that lines up in specific areas. Now, for me, I'm just going to use the higher time frame one. I know that I'm looking for deep premium sells or deep discounted buys. What does that mean? Is if this is the whole structural range, I know that the higher that it gets above the 50% or the equilibrium, the better return I'm gonna have, right? So in the sense of sells, I want to sell above the 50%, and the higher it gets, the better it is. Now, one thing that I taught my traders how to do is I taught them how to look left and trade right. So what does that mean? It means that you look at everything that's happening in this area of price. Something had to happen to create this huge catalyst. And for me, I love order blocks. Imbalances are great, but I love order blocks. I see this last candle up before the big move down. So for me, what I'm doing is I'm looking at this candle right here. Now, what I like to do is I like to put two entries. I measure out this candle from the body to body, sometimes wick to wick, it just depends. But in this case, it was body to body, and I put an entry at the open. And then if it gets there, I put a second entry at the 50%, and then I put stops right above the high. So I was looking at a setup like this, exactly like so. Now you might be saying, Justin, damn, this is a huge stop. Well, in the sense of how we trade, I'm a swing trader. I'm taking big swings, and I'm in trades for sometimes days at a time, sometimes a week or two at a time, right? I might take a trade early week, and I might be finished with that trade late week. I might take a trade midweek, and I might finish it the next midweek. You have to establish what type of trader you are. For me, this setup I found on the 1 hour time frame. All the concepts that I'm teaching you guys today, you can use them on the higher time frame, and you can also use them on the lower time frame. It doesn't necessarily matter. It's just based on you and your perspective of what you're trading. The same things work on the higher time frame, the 1 hour, 4 hour, daily, weekly, monthly. The same things work on the lower time frame, 1 hour, 30, 15, 5, 1, and all the time frames in between. When it comes down to it, we have a confirmed new lower low. So we have the high, and now we come here, we have, you guessed it, a lower low. Now, since we have that lower low, what we should see price to do is we should see price make a pullback to make a extension lower, right? Now, what I like to do is I like to use measured moves. If this last move was about, let's see, let me change the settings on this. Style, change pips. This last move was about 700 to 800 pips. 9 times out of 10, what you can kind of predict is if this last move was about this size, the next swing wave should be roughly about the same, right? Now, this is something called market geometry. It's something that I teach in depth to my students. But in regards to it, this is pinpoint perfect setup when it comes down to catching reversals. And if we let this play out and see what happens, price comes up and up and up and up. It tapped us in perfectly. It gave us a retest, and then we rid the wave. And then eventually, pretty sure this hit TP. Boom, perfect. Eventually we hit TP, and that's where we're currently at, right? I always use a negative 27 as a take profit, and I also use it as a de-extension level. This was a trade that was a 1 to 5.4 risk to reward. This isn't a trade where you have to sit there and manage it and sweat and, you know, X, Y, and Z. This is a trade where you can sit on your hands, you can place your trade, you have a predetermined risk, and not just that, but you can sit, wait, let the market do its thing and wait for the next setup to come. Now that Euro NZD has made this wave, now it's starting to look like it's starting to slow down. As it pulls back, we'll look at the market, we'll look at potential areas to catch re-entries, and we'll keep catching these swings down until we get another reversal. But guys, this was a very, very simple video. This is my favorite reversal pattern. I have a very simple system. You know, when it comes down to you trading, you need a system. System stands for save yourself time, energy, and money. So when it comes down to you trading and you being consistent in the markets, you need to create a system that's a mechanical system. A mechanical system means you need to take the emotions out of the market and you need to just focus on what works, right? Understanding the charts and the trend and how the market goes up and down is one thing, right? But having a plan of how you approach the market is another. And that's why having these entry models and having this thought process is so important. You know, my goal with the video was not just show you a trade where I caught 800 pips, but it was walk through of how I'm looking at the market, how I'm thinking of the market, how I'm processing the trades, and not just that, but how I'm executing, right? But with that being said, guys, I hope you enjoyed today's video. The first link in the bio is going to be how you can join our free signals chat. You know, the free signals chat is just a way for us to give back to the community. If you guys have seen the results are going absolutely crazy. I'll have the editor just throw some results all over the screen. But family, I appreciate you guys watching this video. Make sure you like, comment, subscribe, and let me know how your trading goes now that you've learned how to properly trade reversal patterns.